Welcome to Motivational Wealth.
Great to be here.
Today, we're going to dive into a really inspiring story, Amit Upadhyaya's journey.
Yeah, achieving financial independence at 46, especially, coming from where you started.
Exactly. A starting salary of just 2.3 lakh per annum. It's relatable for so many.
It really is.
And this whole idea, this pursuit of financial freedom,
Mm-hmm.
it makes you think, doesn't it? That desire for liberation, control over your own life, it kind of mirrors that deeper sense of freedom, that liberation from burdens, um, like the freedom offered through Jesus's gift of salvation, being free to live a life of purpose, of joy.
That's an interesting parallel, the freedom to pursue what matters.
Right. So our deep dive today is all about unpacking Emmett's story. We want to pull out those actionable insights, the things you can actually use on your own path.
Absolutely. And his story really shows it's not about your background dictating everything.
Not at all. So let's get into his strategies. What stood out first?
Well, for me, it was that fundamental shift in how he viewed savings.
Yeah. The whole expenses, income, savings thing.
Exactly. He flipped it. Instead of saving what's left over after spending.
He spent what was left over after saving. It sounds simple, but it's a powerful mindset shift, isn't it?
It really is. Prioritizing it like that, right from the start, treating savings almost like a bill you have to pay.
Like paying yourself first.
Precisely. And that discipline, he really hammered that point home. It wasn't about waiting for a big raise. He started immediately.
Which built that foundation early on.
And built momentum.
Okay, so saving first. But he also had a big goal, right? That $1 million target.
Yeah, that North Star.
Yeah.
Setting a clear, specific, maybe even audacious goal.
Does that actually help? I mean, $1 million seems huge when you're starting out.
I think it's incredibly important. It moves it from a vague, I want to be secure to a number, something tangible.
Right, something you can actually aim for.
It lets you start thinking, okay, what does it take? What kind of savings rate? What kind of returns? It makes the path clearer, even if it's long. Turns aspiration into a plan. Sort of.
Exactly, a concrete objective.
So saving discipline, clear goals, but he wasn't just putting money under the mattress. He invested.
Oh, absolutely. Started with mutual funds, learned a bit, then moved into direct stocks.
And that TVS Motors story is, wow. Buying around 59 back in 2011.
Yeah, and then having the conviction, the guts really, to buy more when it dipped.
Even when analysts were apparently downgrading it. Holding on for that, what was it, nearly 5,000% return?
Incredible, isn't it? It just highlights that need for conviction based on your own research.
Not just following the herd or panicking at dips.
Right, understanding the business, believing in its long-term prospects. That allowed him to ignore the short-term noise.
Patience and perspective seem critical there.
Definitely. Long-term thinking is key.
He also talked about keeping an opportunity fund, some cash ready to deploy.
Yeah, keeping some powder dry, so to speak.
How does that fit in? Is it about timing the market?
Not exactly market timing in the risky sense, I don't think. It's more about preparedness.
Preparedness.
Yeah, being ready to act when, a great company you've already researched suddenly becomes cheap because of some market panic or event, like you mentioned with COVID.
Okay. So it's strategic patience, waiting for the right pitch.
That's a good way to put it. Having the capital ready when value appears based on your homework requires discipline not to just jump in anytime.
Right. So if we boil it down, the big takeaways.
Well, prioritize saving, always. Make it automatic, non-negotiable.
Set those clear, ambitious goals. Give yourself that North Star.
And with investing, do your homework. Build real conviction.
And have the patience to see it through right out the bumps.
Absolutely. Don't get shaken out by volatility if the fundamentals are still sound.
And maybe keep some cash ready for those rare opportunities.
That strategic opportunity fund, yeah. It's about discipline, learning, and focus.
It really drives home that financial independence, like that deeper freedom we mentioned. It's not about luck or background.
It's about consistent choices, disciplined actions, day in, day out.
That mindset shift on savings, income minus savings equals expenses, that's something anyone can apply, like today.
Immediately applicable.
And just like Amit set his $1 million goal, maybe take a moment to think. What's your goal? What does financial independence look like for you? Start mapping it out.
Simulate the path, yeah.
Remember, TVS Motors, conviction, long-term view, even through dips. It paid off massively. Don't let short-term noise derail you from well-researched decisions.
Solid advice.
Well, thank you for joining us for this deep dive, and thank you for subscribing to Motivational Wealth. We really hope we're providing that life-changing motivation.
grounded in principles that resonate with building a life of purpose and freedom.
Exactly, like that gift of salvation we talked about, finding true freedom. So the question to leave you with is, what does financial independence truly mean to you?
What freedoms would that unlock in your life?
And maybe more importantly, what's one small disciplined step you can take today to move just a little bit closer to that vision?